Taking a quick look at Ethereum Classic, seems to be performing better than most of the market, especially Bitcoin. Bitcoin's been setting lower lows, and we've actually yet to set a lower low from here, as you can see here. Now, we are hanging out between Fibonacci levels right here, so I still expect a move all the way to this green box, or even at the 786 before we have a bounce. We could very well find a bounce here up to this 0.5 level on maybe a smaller term fib, like micro fib, something like this, which could be the one level down here. It really just depends. But in my opinion, I still think we're probably going to see this move to the green box. Now, if we are going to bounce, it really needs to happen pretty much now. We need to break above this 0.5 level and start trading higher. Because if not, this bounce could just be a rejection of the 0.5 level before we move down. You see the EMA ribbon is relatively far away from the price action here, as well as the Ichimoku cloud. The Ichimoku cloud is actually just flipped red on the daily, as well as the EMA ribbon here. So again, we could have some more downside at play, especially since we've only tested it once here and got sent further down. The 4 hourly is actually looking a little bit better. We've been testing the EMA ribbon quite a bit throughout this range. We have also tested the Ichimoku cloud already once, and we actually almost tried to break through it here at the thin part, but ultimately got rejected again. So the next move we have up to the EMA ribbon could very well break it to the upside, again, because we've been testing it a bunch of times. Now this move would also have to break the Ichimoku cloud to the upside, which is sitting around this 0.5 level. So again, we really need to break above this 0.5 level on the Fibonacci retracement so that we could potentially start a new uptrend. The hourly is looking a little bit more turbulent. You can actually see here that we have been below the 200 EMA for quite some time. We did have a bit of a fake out here, and then we trended lower. This is definitely a good sign. We're testing and even breaking the 200 EMA to the upside. So our next test of the 200 EMA here could very well break it and then retest it as support instead of falling back through it. So to sum things up, I'm not too entirely sure why Ethereum Classic is getting stopped out right here. Could be because of these levels back here, but as you've seen in the past, when we have moved to this area, it's been quite explosive. So we should be seeing a pretty explosive move to the downside. But with that in mind, if we do move down from here, which I still think is on the table in my opinion, we could very well move to this green box that I mentioned in the past, which ranges anywhere from $13 to $17, or even at the top of the 618 here at 18 bucks. So don't be surprised if we do move down here before we see a bounce. If we do find a bounce here, we could very well test the 0.5 Fibonacci level as resistance before seeing that move back down to the green box. And this will be around $28. If we do manage to go ahead and move down to this green box of support, I feel like we'll have a better chance of breaking this to the upside, because as you can see back here, when we're trading at this level previously as resistance, we got quite substantial rejections to the downside, and when we finally broke it to the upside, and even tested as support, but when we did break it to the upside, we had quite a substantial move out of here. So I expect at least somewhat of a bounce here, at least to the 0.5 level around 28 bucks. And we could very well break this to the upside, especially if we start chipping away at it and breaking this previous high right here. Because at that point, we'll be setting new higher highs and hopefully higher lows, which will be technically an uptrend. This is all I have for Ethereum Classic today. If you enjoyed this video, hit the like button. If you haven't subscribed already, go ahead and do so, as I try to post content daily. As always, this is not financial advice, and I'll see you in the next one.